one of the account seniors from Ellis & Co, Chartered Accountants and Business Advisors in Chester and Wrexham. A little bit about the business. We're 19 strong. Got clients that range from sole traders all the way up to big companies that require an audit. Established in 1989. I'm not a founder member, but I'm actually in my 15th year. And it's been a busy 6-week period. Been helping clients, as Emily said, furloughing. Lisa was going to talk about that. The C-bills, coronavirus business interruption loans, helping people get those. On the self-employed grants, obviously Nick's been working hard with the tax team there. And as you can see, I think Nikki Edge said in a question about keeping up to date, our website's got loads on it. So if people need to have a peek at that, there's plenty of information. So yeah, so firstly, really, cash flow. One of the points there is producing a cash flow statement. This template will be available, and as Emily said, it'll be getting shared with you all the information along with the slides. For this, obviously, data has got to be bang up to date, because otherwise you would be flying a bit blind. But how is the business cash flow looking? Patricia, if she's on, mentioned is cash still king? It absolutely is. A lot of our businesses now and have been getting their cash flow in place for when we're coming out of this crisis. That's what the government were looking to do. The government funding was there to get people through it and to come out the other end. There's a little bit of light at the end of the tunnel. We've got clients now who are in the construction game, and a few weeks ago they were getting their cash flow in place and they've been obviously trading the last couple of weeks now and doing okay. Obviously, there are a lot of things we can be using for cash flow. Example, bounce back loans, really good thing from the government. The government backed. It's actually a 6-year loan because it's 5 years, but you get a 12-month holiday at first, only at 2.5%. So some of our clients have actually been using the bounce back loans to pay off existing debt. So obviously that's easing cash flow, because at the moment, where they would have loan repayments going out, they've eased that because they've paid the debt off with the bounce back loans and took advantage of the 12-month holiday. Also, government grants are available. Look at your local authorities. Cheshire West has just brought out a non-discretionary grant, and that was available from the 1st of May and finishes on the 31st of May. And they just require forecasts on the information and some profit and loss information. Current deferrals are available, again, to ease cash flow, VAT and corporation tax. So if you've had some VAT due, you can obviously defer that till April next year. And again, that will help the cash flow of the business. Directors' loans we've been looking at. If a individual director or a group of directors have some personal cash available, they can obviously put that into the company, and it's tax allowable to excuse me, get that cash back out the company at a later date. Now the business can win. It's a win-win really here, because the director can actually charge interest on the amount loaned to the company, which is a allowable expense for corporation tax, but it just gives the director a bonus on the money he's inputted into the company. Debt finance is another classic. If you've got some considerable debts being owed to the company, you can finance the debt to get the cash in earlier rather than later. There will be obviously fees to pay on this, but again, it's another boost to the company's cash flow. Time to pay, it's a good arrangement with the HMRC. So obviously I said to defer VAT, but you can do a time to pay as well. So what I mean by that is, obviously you're going to defer the VAT, but you can set up an arrangement whereby when it is due, you can spread that cost. So you're sort of deferring it to begin with, but then spreading the cost, paid to HMRC. A little bit of interest on that, but again, cash is king. Finally, on the third point, R&D, Nick is going to touch on this, but research and development claims can be quite lucrative for some businesses. I'll give you an example of this. We actually had a client who was due to do an R&D claim, with a year end of 30th of June. We brought the year end of the company back to March, got the accounts done very quickly, and off the back of those did an R&D claim. Now, the company has then received a substantial amount of money to ease the cash flow because the research and development claim has gone in early. So all this planning around cash flow is worth doing. And, you know, as I said, to produce a cash flow, it's well worth doing, but just make sure that the data you're putting into it is accurate. But you'll see from the template that we share that yeah, it's a really useful tool. Can I have the next slide, please, Brian? Okay, so profitability. Obviously, this is more around budgets. Joanne Lundy said, you know, how do we agree things with clients? You know, getting the money in without perhaps straining the relationship. First point there about getting on top of your debtors. Have a look at who the good debts are and who the bad debts potentially are going to be. So, you know, obviously everyone's got good payers and bad payers, but perhaps with the ones that you may struggle with, agree new terms with them. You know, perhaps extend your terms with those people to make them a little bit more at ease, but it gives you a better chance of getting the debt in. Future sales there, the second bullet point under income. Yeah, have a look at what your order book is looking like if you're budgeting, and also look at the services that you're providing to customers and clients, and you know, are there any extra services to be offered? Because you may have thought about it a couple of years ago to offer some extra services to your business, but perhaps didn't have the time. But in this current climate, you know, it might enable you to get those services in place to strengthen the relationship and obviously build those sales. Again, customers paying earlier. Let's have a look at them. Agree terms, and if you perhaps get 50% up front, you know, it's worth doing. Raising more cash than you need. I mentioned the bounce back loans. We do have a lot of people applying for these. You can get up to £50,000, and it's there if you need it. I mentioned, you know, the repayment holiday is there and there for a reason. The government backed, so you might just want to apply for the bounce back loan, just so you've got a bit of a buffer there. Under expenditure, obviously, people budgeting, you know, you do put figures against various expenses. So similarly, you know, to cash flow, prioritize things. So, you know, to get the business back and winning new business, you may want to increase marketing expenditure. But of course, due to the current climate we're in, as we are now, we're on a Zoom call, you may have a budget for the year for travel, so you might want to, you know, decrease that. So just looking down your profit and loss and seeing where you can, you know, decrease expenditure, but also put a bit more in, more of a priority expenditure. Main suppliers, you know, you can change terms of them. I mean, they're in the same boat. Peter Gunson, in your question, you mentioned that. So everyone's quite approachable at this time, realizing that, you know, we're in the pandemic, but business has got to continue. So as it says there, where you pay annually, you know, you might change the quarterly and just reduce the cost slightly. And as the third point says there, these current deferrals for taxes, definitely worth doing. So if you are doing a budget where you've got quarterly VAT expenses coming out, yeah, you know, you can amend your budget accordingly. So all about getting the house in order, really, in terms of budgeting. And the next slide, please, Bryony. Yeah, a big thing here. Obviously, we've had a few queries on this, and this is obviously huge, especially at this time. Going the extra mile with your customers obviously increases the relationship, and it keeps it solid for life after the crisis. Communication is key. You know, always keep available on the end of the phone or email, because obviously, especially for us, as I mentioned, how we've been helping people, A lot of this is new to people, and they need to be assured that someone on the end of the phone is available to help. And again, obviously, looking outside the credit agreements and terms, just try and be flexible with people. As it says there, their business is your business. So if you are able to be flexible with terms of payment and the debt, it goes a long way. And it is a case of you look after them and they'll look after you, in I suppose in any industry. So yeah, that's it from me. The next slide, Bryony, is details, as I've mentioned a few times, about payment deferrals, and they're, as you can see, are the dates that you can defer, with examples of due dates, but obviously they will be on the slides. My email address will be at the end of these slides as well if you've got any further questions. I appreciate I've got a bit of Q&A at the end, but yeah, feel free to contact me. And I will now hand over to our tax manager, Nick Charnley, but thanks very much for listening.
Bryony, could you just pop back to the previous slide for me, please? I just want to take a bit of time just to give out the detail on these payment deferrals, just to make sure that everyone is fully aware of these options. So starting off with the self-assessment payments on account, it is the second payment on account due by the 31st of July 2020. This option to defer is available to anyone who has this payment liability due. It's an automatic deferral, so there's no application required. It's simply available to everyone. And what the revenue has said is that they are not going to charge any late payment penalties or charge any late payment interest, as long as this payment is made no later than the 31st of July 2021. So it's, as John was saying, for cash flow purposes, it's a really useful tool to sort of take into consideration and use this if you really need to. But that said, it's only optional. You don't have to take the deferral. Not going to cause you any cash flow problems or any hardship. Then I've recommended to a number of people that just make the payment as usual if you've got money there available, and you know you're not going to. In a similar vein, the revenue have given sort of a VAT payment deferral for any VAT payments that were due between the period of March 2020 and 30th of June 2020. Again, it's an optional with deferral with no application required. You do, however, have to make sure that you submit all of your VAT returns as normal. So even if the payments would have been due in this period, make sure that your VAT returns are submitted by their usual date. If you are going to defer your VAT payment and you do normally pay by direct debit, the key thing to remember is to make sure you cancel your direct debit, purely because the revenue will automatically collect the payment. Right? If you want to make the deferral, that's going to cause potentially having to negotiate with the revenue to get that payment back to you. As I said previously, if you are in a position where making this payment isn't going to cause your business any hardship or cash flow problems, again, consider making the payment now, or maybe just defer it for a short period of time. You don't have to hold on to it until the 31st of March, which is the deferral date. You can pay it at any point in between. And then just on another quick note, which John touched on as well, the time to pay off revenue, have scaled this up to pretty much anyone, individual, business, company. They're really open to discussing, payment options, payment plans, and things if you are struggling to meet your liabilities. They have several helplines available on their website, which can be provided if needed. Yeah, okay. Next slide, please, Bryony.
Just before we move on there, we've got somebody who wants to ask a question, so I'm just going to unmute you, Julie Billings, okay, just so you can ask that question. So if you'd like to ask. So we just had you raise your hand, Julie. Have you got a question to ask? Okay, what I'll do is I'll just pop back on mute for you there, Julie, but feel free to pop your question in the chat box and I'll ask it out when it comes in.
Okay.
That's fine, Nick, just carry on.
Okay.
Oh, sorry, no, the questions come in. I do apologise. Does the referral date option to defer VAT, is it the 31st of the 3rd, 21, not 20?
Yes, the latest date that you can make the payment, so any payment that you've deferred, is by 31st of March 2021. Apologies if I said 2020. The period that payments can be deferred from is between 20th of March 2020 and 30th of June 2020, but must be paid by 31st of March 2021. That clarifies that for you, Julie. Everyone okay for me to continue?
Yes, thank you.
Yeah, okay. So I'd like to move on to a quick discussion on tax relief, particularly available for and applicable to the current climate. Working from home, what tax reliefs can we obtain from working from home? Employees, so if you've got employees or if you are an employee and you've been forced to work from home due to the current measures in place to control the coronavirus, there are expenses rules that cover you for some relief. Of sort of really rules around this, so it kind of has to be enforced and not optional to work from home. So if your workplace is closed, or you've been given instructions to, or advice to self-isolate due to being at high risk. If you are opting to work from home, certainly in normal circumstances, if you're opting to work from home rather than it being contractual or required, then you may not qualify for working tax relief, but I think it qualifies really under the current circumstances of being enforced, and kind of really key for us all to be working from home as much as possible. So what can be claimed? Mobile phones, for instance. You can have a mobile phone with a SIM card provided by the employer. Doesn't have to have any restriction on private use, as long as it's paid for by the employer, can be provided directly to the employee, completely and anything arising on that. Office equipment, like myself, I needed a laptop to work from home, and Ellis & Co provided me with a laptop. Any other sort of office equipment, desk, mouse, screens, printers, anything of those sorts of things can be provided, as long as there's no significant private use. Then again, these are non-taxable, along with the mobile phone. If an individual has had to go out and purchase a piece of this equipment personally, the employer can directly reimburse the individual for that cost without implication, which can be quite useful at the moment. Obviously, not being able to get into the office to pick up equipment, things like that. You can go out and purchase it and use it from home after reimbursement. Things like broadband, if you require broadband to work from home, which the vast majority of us do, but you already have it in place, there's nothing really that can be claimed in that sense. However, if you didn't have broadband or don't have broadband and it is required for you to be able to do your job and you have broadband installed, this can then be paid for by the employer, again with no tax implication, as long as private use is limited and minimal. And the big one that we normally get asked for and asked about is utilities, gas, electric, water, that sort of thing. Yes, it can be claimed, but you have to be able to define the amount, and that's the really difficult bit, is defining how much electric you've used in the course of performing your duties. So generally speaking, a lot of people utilise the tax-free and receipt-free reimbursement of £6 per week, the revenue. Okay, next slide. So I'm just going to move on now to research and development, or R&D as most people know it. Probably one of the least used reliefs out there that are available, able to claim. A lot of people don't really understand that they can claim it. So what is R&D? Essentially, if your business spends money, incurs costs, etc., developing or enhancing a new product or service, for example, in its science and technology background, then you could receive a reduction in your corporation tax liability, or even a cash refund or a cash payment as a result of making an R&D claim. Like I said, there's lots of businesses out there that are missing out on these valuable tax rates, and we'd really like to get out there to encourage people to look into their eligibility and whether they can actually claim for research and development costs. And of course, get in contact. We are really keen to help anyone else to do such a claim.
Nick, we've just had another question actually, and it's quite a good one. So can utilities and payments for those be defined based on the same period last year or last month? So if you're new to home working, can you use previous bills to determine how much you could claim on utilities?
Yeah, that sounds perfectly reasonable to me, and probably one of the options that I would suggest for calculating it. So yeah, looking at the same period 12 months ago and calculating if there's been an increase in usage. I think that's acceptable for the revenue.
Fantastic, thank you.
Yeah, so who can claim our research and development? So a company can claim if the project that they're working on is for an advance in science or technology, or it directly contributes to achieving said advance in science or technology. A manufacturing company can potentially claim R&D if they have to incur significant cost in researching and developing a way to overcome a problem in their manufacturing process. So it could actually improve the efficiency of their manufacturing process or their manufacturing process. The main one, and probably most obvious, is creating a brand new cutting edge product that's never been seen on the market before. And for IT companies, developing bespoke software packages, it could be on behalf of someone else, to allow them to do their business, their trade, or run a process. There must be an element of technological uncertainty prior to the work commencing, and it isn't readily available or deducible by a competent professional already working in the field. This project must achieve something that no one else or very few people have already achieved. You will, of course, have to spend money in developing your new project. So it can't just be something that you quickly think of and it takes 5 minutes to put together. It's got to be something that you are actively developing, and it takes time and costs to develop. And ideally, the project must relate to your company's trade, whether you are a brand new company or an existing company. Okay. Now, what can be claimed? It's quite simple. There's some quite simple categories that falls into. They are fairly serious as well. The costs of employees and subcontractors work on the project and on the research. Any materials that have to be purchased to facilitate the research. If you're a pharmaceutical company, payments to clinical trials volunteers, things like that can be the costs for those can be claimed, along with the costs of utilities and things like that that are used during the research and development process. There are more. You can go on. But here at Ellis & Co, I'd just like to mention that we have and frequently do make significant claims for research and development on behalf of our clients. They can result in quite significant returns and reliefs. We have had clients over the years who have received tens of thousands of pounds in cash refunds, and in certain instances, corporation tax liabilities have been reduced by figures into the hundreds of thousands of pounds. These are potentially really big reliefs that are available to companies. So if your company is able to claim, the opportunity really shouldn't be missed. The very quick small print, to make a R&D tax relief claim, it's done by the corporation tax return for the company, or an amended tax return if you haven't got the claim available at the time that the corporation tax return needs to be submitted. And you have 2-year time limit from the end of the relevant corporation tax period to make your claim. I hope that's clarified a few points for everyone. That's all from me. So I'm going to now hand over to my colleague Lisa to give you some information on the payroll. Thanks.
Hello, I'm the payroll manager at Ellis & Co. I'm just going to talk you through furloughing. The coronavirus job retention scheme allows employers to claim up to 80% of their employees' regular pay. This is subject to a limit of £2,500 a month if they've been furloughed. Furloughing means if they're unable to work due to the lack of work coming in, or there's just not enough work to go around every employee that is employed by your business. The claim can also include the employee's NIC contributions and also the 3% auto-enrolment pension contributions. There are restricted amounts. The scheme has actually been extended till October 2020. It's good news for businesses. However, the government have actually started asking companies to start sharing the cost of the scheme from August. I'm not sure about if anybody knows about this or whether they've been contacted by the HMRC themselves. But as far as we're aware at the moment, it's still subject to legislation changes. The plan is to enable employers to use the scheme to bring people back into employment on a part-time basis. Again, they haven't defined the finer details yet. Who has been furloughed? Have you made a list of people in your company that have been furloughed and how long they've been furloughed for? It's really important that you keep these documentation to hand, and you have to keep it for 6 years. The task needs to be carried out every time you do a payroll, because you might be adding people into the furlough claim, you might be taking people out of the furlough claim. To work out who you want to furlough and who you don't, obviously you need to use your own judgment really. You know, which staff, you know, is more important to the company in terms of workforce. You also you need to work out how long they're going to be on furlough as well. Because it needs to be a minimum of 3 weeks. Holiday pay. The majority of workers are entitled to 5.6 weeks of holiday pay on an annual basis. There's no exception to this except for the self-employed. The entitlement remains unchanged regardless of whether an individual is on sick leave, paternity leave or parental leave of any form. A worker can also request holiday at the same time as they're off on sick, but cannot be forced to take any holiday while they're on sick. The workers who have been placed on furlough will also still accrue their statutory holiday entitlement throughout the whole of the period that they're on furlough. Any additional holidays laid out in contracts, they'll still accrue those as well. Workers on furlough are entitled to take their holiday during the furlough period, which means that you'll have to pay 100% pay, but you can still claim back the 80% furlough for the company, and you'll just have the 20% liability for the company. Any leave won't affect the furlough at all, so you don't have to stop and start just for the holiday period. One thing I will stress is mandatory periods must apply still. So if somebody is taking a week's holiday, they must give you 2 weeks notice, and vice versa. If it's 1 day, it's 2 days notice. If employers would like workers to take annual leave during the period of furlough, they need to discuss it with their employees. Holiday pay for those on furlough, also who aren't on furlough, should also be calculated in line with legislation based on the workers' usual earnings. The government has now passed legislation. It was an emergency legislation, the Working Time Coronavirus Amendment Regulations, which means that workers can actually carry their holiday entitlement forward. It's so that the impact on the business isn't too big, really, and it's more practicable for people to carry it forward, and they can carry it up for up to 4 weeks of their holiday entitlement for 2 years over the following year. So that applies to everybody, those on furlough and those that aren't on furlough as well. They've also made an amendment to the sick pay. So at the moment, there's a new online service for small business and medium-sized businesses to recover statutory sick pay payments that they have made to employees. This is being launched on the 26th of May. So we'll be able to claim back up to 2 weeks of the statutory sick. So anybody that's had an isolation note, anybody that has been shielding due to the COVID outbreak, you'll be able to claim that back. Employers are also eligible if the PAYE scheme has been created and started before the 28th of February 2020. If it was created after that date, it's ineligible, unfortunately. Are they self-isolating? Are they shielding? Only you will have the documentation for that. So it's about making the right judgment call of whether you can or can't. So again, I stress that keeping the documentation for this period is really important, because if you get an audit, they will be looking at what information you've got versus what they've paid out for the claims. Can I have the next slide, please? Thank you. What staff, so we're looking at staffing levels. What staff will you need? How are you going to work your rotas? Looking at your team, how will you need to run your business at time to time? You can work on looking at your rotas. Can you work on a rota basis, to see what's fair and what isn't fair? Could you furlough half your team? One period and then bring them back and then furlough the other half of your team? Do you need to do individuals and work on a rotation system? You know, that's entirely up to you and obviously your business needs. What proportion of your business is going to come in? Obviously it's we all have to wait and see, don't we, because so many different businesses have different needs from time to time. You need to look at your forecast and what your business needs are at that particular time. How many staff do you have in place at any one time? Obviously we've got to keep to government guidelines. The social distancing, can you social distance appropriately? Can your office cope with it? Can your factory cope with it? Can your bar, restaurant, things like that? It's really important that you look at those things. Now, the government have published some guides on how to social distances in various sectors. So it might be a good idea to have a look on the government website to see if they've actually got one that meets your needs. Do you need to make cuts to your staffing levels over time? Do you need to make pay freezes? You know, it's entirely your responsibility to look at all of those and then make judgment calls based on that information. And redundancies take the same tone as they did before, and you just have to keep to the guidelines. Can I have the next slide, please? Thank you. Again, is your team happy to come back to work? I think that is a really good question. I'd have a conversation with your staff first. You know, for those that are happy to come back to work, have you got the social distancing in place for them? Keeping in constant contact with those that aren't quite happy to see whether you can meet their needs, but obviously your business needs to come first as well. Again, is there anybody shielding? Because it's important for those members of the team to continue shielding and obviously implement things when they are out of the shielding period. Do you have PPE in place? What kinds of PPE will you require in your workplace? You will need to look at your employment's holiday entitlement as well. Again, back to the holiday things to keep in line with the law and the legislation. Again, it can be carried over to 2022, as mentioned previously. So, are you ready for the changes? Have you got your payroll in place? Are you aware of the national minimum wage and the national living wage changes? And what impact is that going to have on your business as well? So, yeah. So, are you ready? Is what I would say. So that's me finished.